government has eased the angel tax norms for startups. So basically, funding by all investors will be tax exempt up to 25 crores. The startup tag time frame expanded to 10 years instead of the current 7. Will there be more investments now that these draconian rules are out of the way? Hitesh Oberoi, the MD and CEO of InfoEdge, joins us now to talk about that. Hitesh, good morning and thanks for joining us. That's the key question, right? Will companies like yours make more investments now that some of these rules are have been tweaked? And also, these changed angel norm rules, what kind of relief does it provide to the investee companies of InfoEdge?
No, absolutely. See, we've been investing for the last almost 10 or 12 years now. Over a period of time, we've invested in about 18 odd companies, and many of them have actually gone on to do very well and have also created a lot of jobs. So I think, and, over the last 10 or 12 years, we've also seen this whole ecosystem fall in place. There are now angel funds, there are HNIs who invest in startups. The government has sort of, made it easier and simpler over time. Of course, there have been a few hiccups along the way, but in general, I think we're in a much better place than we were many years ago. And the whole ecosystem is now sort of raring to go. There are so many sort of students graduating out of college, starting startups straight out. There are people who are giving up jobs in big companies and sort of, getting into startups. So I think we need to sort of support them, and these are steps in the right direction.
Okay, no, that's for the macro economy. I'm asking you if, good morning, Hitesh, first, whether your investee companies immediately have benefited.
No, there was, no problem with our investee companies. It's not as if they had got notices from the government or anything of that sort.
Okay.
And we've been investing in them for a long time. So there was no problem in any of those companies. Yes, going forward, hopefully there won't be any problem given the clarification that have been issued by the government.
So it's basically a worry of your head.
There was no problem with them because of the angel tax.
Okay.
Absolutely. So there was some confusion around rules, especially when it came to companies investing in startups as well. So there was some confusion with regard to amounts, with regard to vehicles which could be used for investing, and so on and so forth. So we have got some clarification. We are seeking more clarification as well.
Since you spoke about how there's so many new avenues to invest in the startup space, what's the big opportunity for InfoEdge now? In 2018, the big investment made by you was in Policy Bazaar. Where do you see the opportunity in 2019? Because suddenly there's this big boom in, startups related to health, wellness, food, etc. Where do you see opportunities?
Actually, there is opportunity everywhere. There are some big trends, there are some mega trends, and these trends are not going to go in a hurry. The truth is that there are now 500 million people on the internet, and this number is only going to grow. Smartphone penetration is still increasing. Data prices are falling. So this is one big wave which we are seeing during our times. Then, of course, there are new technologies that are emerging, which are likely to be game changers going forward. The world of AI is for real. Machine learning, AI, big data, these are sort of big trends, and as is often the case with new technologies, people overestimate what will happen in the short term, but they tend to underestimate the impact they can have in the long run. So what you're seeing is startups mushrooming everywhere. Startups in the big data space, startups trying to use AI to disrupt existing businesses, startups in rural India, startups trying to bridge the gap between rural and urban India. So there are, these sort of technology trends have created new opportunities everywhere. As far as we are concerned, we try and spot companies early and try and often be the first sort of company to cut a check for them, and that will continue.
Okay. Are you going to exit any of the investments even partly? I mean, Zomato or any of the bigger ones? Any of them?
See, we are a little different from the funds out there because, we invest directly from our balance sheet, number one. Number two, we take a long-term view on companies. Ideally, we would like to stay invested in companies forever if they are doing well. We are able to capture the value created by these companies in our stock price, so that's not an issue. So it's not as if, nor do we have to return money to anybody else. And this is one reason why a lot of startups actually prefer us, because we are different. We are long-term capital. On the other hand, if it makes sense for the company, if it's sort of for us to exit, to let some big investor come in who sort of would want to take a large stake in that company, and the only way out for that to happen is for existing investors to exit partly, we are open to that as well.
Okay. For Zomato particularly, will you need more money or is more funding required? Because suddenly there's, an outburst of competition, whether it's from Swiggy, Uber Eats, Food Panda, etc. Any expansions lined up for Zomato?
No, you're absolutely right. That space is hyper competitive at this point in time. We need to get more sanity into that space, in my personal view. Companies are burning a lot of money. There is a lot of cash available, and that actually results in some of these sort of things happening. Yes, of course, there is a lot of long-term value to be created in these sectors, and there are lots of growth opportunities. And whether Zomato will need more money or not will depend on how Zomato wants to play the game. Do they want to expand aggressively? Do they want to get into new sort of areas? Or do they, for the time being, want to consolidate? I'm not really the best person to comment on this at this point in time. You'll have to speak to the Zomato management.
Okay. No, very quickly then, what you have to call legacy now, the Naukri revenues. How is the demand there? How is revenue growth? How is job growth?
Yeah, so actually this year has been great for our internal businesses. Both Naukri and 99acres have had a terrific last 9 months. The Naukri business has grown almost 20% plus for the last 9 months. In fact, last quarter growth was even higher. Even 99acres has had a great year. Maybe we've been growing at almost 40% for the year. So issues like RERA, demonetization, etc. are largely behind us. And this is all happening in a market in real estate which is stable. It's not as if the market is off the charts or anything. Again, these are long-term trends which have to play out. More and more recruitment is going to happen online across categories, across sectors. More and more sort of real estate will be bought and sold online. And so these are like long-term trends. We may have our ups and downs. We may have a couple of bad quarters or a couple of very good quarters. But this is where industry is generally headed. As far as Naukri is concerned, I mean, even the IT scare is actually largely behind us, because last year our growth was impacted to some extent because of all the issues pertaining to IT, where people said, listen, IT services is over, and automation will take over everything, and it's all going to be AI. I mean, maybe 10 years from now, 20 years from now, but not happening in a hurry. This year IT companies are back to hiring again, and that's why Naukri is doing well.
Oh, so EBITDA margins of 30% maintainable?
Well, that is going to be a function of how much we want to invest in the future. Okay. The way we operate our businesses is we sort of make investments which we think are relevant and for the future, and then we hope that business follows. So we've upped our investment in multiple areas. We're trying to build Naukri for the next take Naukri to the next level. So in like I said, machine learning, data science, enterprise cloud on the enterprise cloud side of things, and even in marketing. So we've upped investment on all our businesses, and we're hoping that revenue growth will follow.
Okay. All right. We'll leave it at that. Hitesh Oberoi, pleasure speaking with you. Thank you very much for joining us. We're going to take a break and come back and do what we've been doing every day. Take a check on one sector after third quarter numbers to see how it is poised in terms of growth and in terms of valuation. Auto sector today. Kotak's Hitesh Goyal will be with us, and of course Sonia is at her analyst perch to detail how the sector is performing. In a minute.